Hi, this is David with the Algo-trading system. This is going to be a summary of what I think are useful resources towards learning more about algorithmic trading. Of course, it's a very limited set of resources. I've only read a few books on the topic. I've listened to quite a few podcasts, but it's definitely a limited perspective, but I think one that can be useful nevertheless. So first, I would like to do kind of a state on things when it comes to algo trading. Not many may relate to this, but what I relate algorithmic trading to, it's a bit like computer graphics in the 80s and 90s. That's when there wasn't really a well-defined hardware that could do computer graphics, and people weren't quite sure what techniques were going to win. And so you had all sorts of rendering techniques that they may have looked cute and interesting and challenging, but they were far from optimal. And so there was a lot of confusion. Interesting times, but maybe not as productive as today. And so trading reminds me of that in a sense that when you approach trading, there isn't, unlike computer graphics today, there isn't a website where you can go and say, okay, I'm learning OpenGL this way, and I'm implementing PBR, and this is the textures. And there is really, it's a bit more like a Wild West. Many people will give you many directions, and probably most of them are wrong. In many cases, there could be some useful bits told by some people or books or podcasts, but at the same time there are bits that are not so useful. You kind of have to find out for yourself. So it's interesting, but yeah, it's interesting and it's difficult, but don't think it's going to get too much better, like computer graphics or other, I guess, technical issues. There isn't like an optimal solution that converges to a specific hardware API set. It's really an open problem because it's a very competitive field, and it's not bound too much by hardware. So people, traders, will continuously behave in many random ways, and this makes up for a very chaotic situation. And means that yeah, there's going to be a continuous need to adapt to new techniques, learn new things. So it's worth keeping in mind. So another premise that I would like to give is, in general, I always think this is a technical topic, and so with everything that is technical, my approach is always to take bits and pieces from left and right. If I get a book, I don't read it from cover to cover. It's not a novel. There is no story there. What you need to know, you just go straight there. Perhaps you need sometimes a little bit of prior knowledge, but that's part of the lifetime of research. The prior knowledge may be in the book. Many times it's in other resources. So you kind of have to jump around with the information. So don't get a book and expect to be up and running. It's not going to happen. But yeah, get used to get bits and pieces from left and right, and also you have to have a sense of who's an authority on the field, and that's both good and bad, in a sense that somebody that's well established that goes to podcasts, it's definitely somebody that for some reason most likely has had some success, but at the same time the really successful people, many times they're propelled there for odd reasons. Just like it happens with trading, it's hard to tell whether a technique it's really working well, or if you're being lucky. There are too many variables involved, and that also applies to who you listen to. Personally, I'm not a big believer in listening to the great investors. I think there is definitely skills involved there, but I don't think that 1 in a million is an example that one can copy. You can try to do that, but I think it's a fruitless effort. It's better to listen to investors, developers that somehow make it, but they can explain clearly how they do it. So I think really understanding what's the skills, and not so much really depending on, not so much relying on what's the size of the pocket of the person that is talking. It's, of course, I mean, it's a balance to find. It's something to be careful about. And in particular, I should mention that why I say this is every day we can see that there's a billionaire, millionaire, 100 millionaires, and hedge fund investors, hedge fund managers that have $1 billion of hedge funds that they go belly up. And so you would guess that the person that manages $1 billion is probably a million times better than the one that invests $1,000. But it's not necessarily the case. So be careful who you listen to. So the first book I would like to mention is Evidence-Based Technical Analysis. I mentioned this book. I don't know if it's the first book that one should buy. It's definitely the first one that I bought. But first, the negative point is really it's not that useful to build strategies. It's a bit dated, and it's not really meant to build strategies. It's really very much meant to kind of dissect the concept of technical analysis. And it's quite a bit of a black pill in a sense. It really shows how easy it is to for a trader to delude himself into thinking that he's doing things right, whereas in fact it's just riding markets which by definition in most cases they tend to be bullish. So I think it's a very essential perspective. It's really it makes you understand how easy it is to basically look to the proverbial cloud and see images that are not really there. A lot of things are just our perception and imagination, and one should be really precise and technical and have a really analytical approach and take a statistical and analytical approach to really evaluating, testing what he's developing. It's a big book, so definitely not to be read from cover to cover, at least not for myself. I only read a portion of it. I found it useful. Your mileage may vary. Definitely I found useful their Monte Carlo approach proposed in the book. That's what we use as well, the randomization of trades, whether they're long, short or not. So I mentioned this book, so I like this book, but it's not directly applicable, I think, in many ways. A second book that I bought, again, it's a book that I don't know if I would suggest right now, Algorithmic Trading, Winning Strategies and Their Rationale by Ernest P. Chan. The author is definitely valid. The book was useful as well. There was a lot of useful information, not directly applicable for our case because the book focuses on the mean reversion strategies, which not necessarily too applicable to crypto, but that's kind of a vague statement. More in practice, it uses MATLAB, at least for this book. And then there are concepts, some are explained well enough that can be useful, others are not, like the use of the Hurst exponent, which is pretty interesting. It's kind of like the foundation of also a fractal generation. I think it can be really useful, but if he has a proper explanation in the book, it's pretty much put out there. Yes, there is a basis for it, but at which frequency do you use it, how it's applied? I think it actually, I don't remember how detailed the implementation is. I don't know if it relies quite a bit on MATLAB again. So I was a little bit disappointed, but happy to have read about this, but it didn't go deep enough in some ways. In other ways, it goes quite deep. It also talks about testing and all that. But again, from this author, perhaps the newer books are probably better today. I don't have them, but I know that he's focused more on machine learning, and the new language that he uses is Python, which is a lot more approachable. You don't need a MATLAB license, and also crypto as well. And he also has a blog which is active. He's posting very frequently. I don't read much of it. Frankly, a lot of the stuff is kind of above my head, or not stuff that I focused on, but it's a great resource regardless. Perhaps see if there's other books that are better fit for you. I don't regret buying this book, but it's probably not the best one today that is written. I don't know. So the third and final book, really, it's Building Winning Algorithmic Trading Systems by Kevin Davey. I found it really interesting. What I found really interesting is actually not so much the technical side of it, but it's a book that puts a lot of focus on the journey that the author went through. So he started quite a while ago, and it took him many years to reach a level of which he was satisfied. And it's quite interesting that it was actually he won some competitions, trading competitions, but at the same time you realize that winning those trading competitions didn't really mean that it was like a trader that could build a reliable profit, because in many ways, many cases, I mean, pretty much in all cases, I guess those winning competitions are about the profit that you make, not so much about the risk. So the winner is always going to be the winner, but how much risk did it take, how much luck was involved, is not very much something that is considered for those competitions. So he went through the process of winning competitions, supposedly being on top in many ways, but then kind of going back and realizing that he had to take a more savvy more safe approach to risk management. So I think that was quite compelling. There is also the technical level, a good discussion about avoiding overfitting and using walk forward and doing out of sample testing and all this usual very important stuff. And he also was quite a bit of stress on using Monte Carlo method. The way he uses it, I couldn't personally relate to it. It wasn't useful to me. I'm definitely missing something, but his approach is more about using Monte Carlo, which is basically randomization, to see what's the chance of ruin of a certain strategy, meaning how likely is the strategy going to make you lose the whole amount, or below a certain threshold that you set. So he provides Excel sheet to do this. Although I don't know, probably if you want to do testing, it's better to write it into code. But yeah, I don't remember too much. I mean, everything of the book. I also probably didn't read all of it, but it was interesting. I think it was a good starting point. But again, it's not like you open this book and it gives you a strategy and you go on. It gives you wisdom on the risks of what things to avoid, and how really to be very thorough with the testing. I mean, he puts a lot of stress on testing, and I definitely agree with that. So then moving to the podcast, there's Nonsense Forex. I started listening to this a few years back when he was really focused on Forex. And it was in many ways eye-opening because this is a trader that is, he doesn't use an automated system, but at the same time he built what you would call an algorithm, which is based on using a set of indicators. And even if it doesn't specify all the indicators that it uses, it explains the kind of indicator. So there's going to be an indicator for the volatility, and there's going to be an indicator for opening a position, and then one for confirming a position. There's going to be a baseline indicator that tells you right ahead whether it's too much risk to open long or to open short. And one thing, this podcast, especially at the beginning, was really spread out through many episodes. So it took several episodes to really get to the final point, which is those, I guess it was 5 indicators. It doesn't tell you which ones. It gives you an idea of which ones are it likes more or less. And it's interesting, from a perspective of a trader that is since a manual trader, not a systemic trader, still is built his own system, and that's, I think, it should always be. What's a bit weird about it is that it does testing, and I think somewhere he also has videos or a blog post about doing testing, but only manually. So basically you go for 1 year, and it's feasible because it does a daily trading on daily candles. So you can fairly quickly do 1 year, I suppose. Still, I don't think that's the way to go. It's not enough to do. I mean, there's too much bias into doing testing manually, and also it doesn't have a statistical value. It's just a once-off. You don't introduce any randomness into it. There's all sort of hidden biases. It's better than nothing, but yeah, I wouldn't do this. And another thing that's a bit weird is that he mentions indicators. Like recently he did a review of the Kalman, but Kalman is really a filter, and again, it's really based on what parameters. It's more of a concept. It's not an indicator. But for him, he has the user perspective. It's kind of somebody that sees a lot of indicators, tries them out, and he sees what they look like, if he feels comfortable or not, if he thinks they're going to give him money or not. I don't understand this. It's not very quantitative approach, but again, if you don't have an automated testing system, it's pretty much the only way to go. It's still interesting, there may be room for somebody to have an intuition of what's a good indicator, but I mean, how do you quantify what's good or not? Nevertheless, I mean, this was the kind of information that in a way it was formative. At the same time, there's things that kind of you go past and you realize, okay, perhaps this approach is not a great fit for algo trading. But it's it's good to listen to something that speaks a different tune, sings a different tune. I think it was useful. I don't regret to listen to this, and occasionally I listen to this as well. So something more closer to systemic trading, it's Better System Trader. It's a YouTube podcast. On YouTube, the recent episodes, they are also with video, which is better. You can see some charts and you can see the person talking. This is focused on system trading. Many interesting interviews. I mean, at the end of the day, you really have to decide for yourself if they make sense or not. Many times I listen to an interview and it makes a lot of sense, and then perhaps later on it doesn't make so much sense, and the opposite is also true. It's generally a pleasure to listen to this podcast. There's some also famous traders, and many times also not so famous, which is also, I think, a good perspective to go back to the idea that if somebody is not writing books and is not making billions, but at the same time is in the business for 10 years, is somebody to whom I can relate more, and perhaps to whom I should listen more. And the only thing is that a lot of the traders of the interviewees, they tend to sell their courses. So it makes me question whether I'm the right business or not by trying to trade. And I try to actually, we try to sell our strategy, not the courses for you to make a strategy. But it's probably more lucrative. I mean, my only complaint about this, in a sense, it makes sense that even if you're a profitable trader, you do want to, first, I guess it's a little bit self-publicity and pride. You want to be out there. You want to be seen as somebody that can teach things. I mean, I can relate to this. I'm making this video right now. And also, why shouldn't you be paid for it? As it's a side business, it's a different form of income. Trading may work well one day, may not work well another day, so why not sell the courses as well? But at the same time, it kind of makes me wonder if somebody's out there selling courses. And this is not related specifically to this podcast. It's pretty much everybody that is in trading as left and right, they're trying to sell something, some courses. You kind of wonder whether that person is too much focused on trying to sell you the system, sell you the courses for you to build the system rather than being focused on their own system. So, what can I say? I mean, it's not necessarily negative things, but it's something that makes me think twice every time somebody's selling something. But pretty much everybody does. So the other podcast, it's quite popular, probably more popular than a Better System Trader, but this one is not for a systematic trading alone. It's a great resource. There's many interesting guests, definitely suggested. At the beginning, I listened to traders that were systematic traders, and so I kind of got into the idea that it was all about that, and in fact, it's not that. So it's a bit strange to listen to traders that are not really into quantitative algorithmic approach. Sometimes when I talk, it sounds funny to me, but I mean, many of them, they're achieved. So who am I to, it's just not my field. But still, it's useful to understand what people are thinking, even the traders that don't have systems, even those that seem to go with their own gut instincts. I selected from this podcast, off the top of my head, those guests that kind of I remember well about. One is Bert Moeller. He's a systematic trader and he has some focus on machine learning, and I could relate to that because he mentioned how machine learning it's in a way important. I mean, he uses it, but you shouldn't rely too hard on it. It's important as a developer of a strategy to always second guess and kind of understand what the machine learning system is doing. And that's the kind of stuff that you kind of initially relate to it, and then with more experience you actually understand, okay, that really makes sense. The other one is Edward Thorp, which is very famous in the field of trading. He has very interesting stories about betting, which is at the root of risk management. Then there was Joshua Greenwald, very much about high-frequency trading, market making. Not something that I think it's at the realm of possibilities of the average independent trader, but nevertheless quite interesting how they do their own hardware to do really high-frequency, low-latency trading. I found it interesting because I guess it's closer to my field of real-time simulation, but perhaps not directly applicable. And then there was an interview with Gregory Zuckerman, which wrote a book about Renaissance Technologies, and Jim Simmons, which is a very famous hedge fund manager. And Christina Chi, which is a hedge fund manager for high-frequency hedge fund. Perhaps nowadays not so high frequency. It was quite interesting to listen to her perspective of the steps, the motion to go through towards building a hedge fund, which is quite time consuming, and it's quite a bit of investment. As far as I remember, I think she mentioned it took her 1 year and a half for her and her associates to set up this hedge fund, even though they already had working high frequency strategies. So last two are a couple of examples why you may want to listen to stuff that also is not about algorithmic trading, but you always want to know also about managing. Even if you don't have a large hedge fund, you're still managing a fund. So there are things to be considered there. So last thing I would like to mention is Anton Creel is a trader. He has this Institute of Trading, which is, I guess, a school for professional traders. He became popular on, I think, a BBC reality TV show where he was already an established trader, and in the reality show he kind of brought up some complete beginners towards becoming hopefully proficient traders. Of course, many failed, some didn't, but he is very vocal about understanding that as a retail trader, as it talks about retail traders, which is basically non-professional traders, you're pretty much there to be cannon fodder. So you're there for others to become rich off your losses. It makes some, it goes into detail how brokers exchanges, they actually incentivize people to really be active with their trading. They go as far as creating sock puppet accounts on forums, really pushing people to be reckless with their money, because in a sense, the average retail trader more often than not is going to lose money. So it's better if that trader loses money as quickly as possible, perhaps through liquidation, which is even more lucrative from a broker perspective because they take the opposite side. So it was quite eye-opening, and it's a useful perspective because it makes you realize how all those exchanges, when they push you to do those trading competitions or to use 100x leverage, they're really just there to profit from your losses. So kind of try to do the opposite of what many tell you to do if it looks too risky. Very useful. I mean, this specific video is 2 hours. He has more videos. I don't care so much about other stuff, more or less educational stuff. It's very much about standard financial approach, but this was really useful. It's definitely a video that I actually watch at least once every year to remind myself, and also because there are some details that I didn't quite understand it from the beginning. So as I learn more and more, I understand more, especially in the details of how these brokers and exchanges take advantage indirectly from their users. So that would be my the completion of this. Yeah, not much else to add. I didn't really read too many books on the topic, but I did listen to many podcasts, and I think the best education, it's really to get out there, write the code, see how it works, and try many strategies. And perhaps, although a lot of time is wasted trying strategies that don't make sense, unfortunately, I didn't really see a book that tells you not to try many things. There's this tendency of saying that you should be constantly developing new strategies, getting new ideas. I think that's a bit misleading because it makes you think that you can look at the chart and you can have ideas. I don't think that trading strategies should be topical. In the sense, it's not like in the moment, in the period, you should build a strategy and then it dissipates. It's ideally you build something that is a solid ground that works in the longer term. Otherwise, you're going to constantly try to chase this, what they call the opportunities. So, but that's kind of a really separate discussion. Yeah, I think we can conclude this here. I hope it was useful. For everything else, I'm always available to talk about this stuff. Have fun. See ya.